Hello, thank you for joining today's webinar. My name is Wells from Premia TNC Taiwan. Premia TNC is a consulting firm located in Hong Kong, Singapore, Taiwan, Malaysia, Vietnam, and Korea. We provide the incorporation services as well as bookkeeping, tax filing, payroll, and audit services. This is our agenda, in which you can find all the topics about Taiwan market and regulations. Today, we will only take about topic 9 and 10, annual filings to government and taxation. We will take about 20 minutes so you can get a picture about the local reporting requirements. The first one, annual filing to Taiwan government. Currently, there are 4 regulatory filings in Taiwan, which is summarized in the table. The first one is VAT filing, and the frequency is every 2 months. The deadline is 15th of the odd months. For example, the deadline for January and February will be March 15th. The company can also apply for monthly basis to file the VAT. The VAT tax payment amount is calculated by output tax minus input tax. If the input tax is more than output tax, the remaining part will be carried forward to the next period. The VAT filing should be filed to the National Tax Bureau and can be done through online. The VAT filing is not required to subject to CPA audit. The second one is corporate income tax return. It is annual filing and the deadline is May 31st of following year. You will also need to file the provisional income tax by end of September if your Taiwan company had profit in the previous year. The corporate income tax rate is 20%. And for provisional income tax is the half amount of previous year's income tax payable. And about the audit requirement, the tax return will be required to subject to CPA audit if the annual revenue is 30 million Taiwan dollars or more. The company applies for loss carry forward. Listed company or specified industry. If your Taiwan company meet any of the criteria, you will need to do the tax audit. The third filing is withholding tax reporting, and the frequency for tax payment is monthly basis, and the withholding tax reporting is annual basis. The deadline for tax payment is 10th of following months. For example, the deadline for tax withhold in January is February 10th. The annual withholding tax filing should be done by January 31st. The withholding statement need to be also submitted to the taxpayer by February 10th. The tax amount to be paid is the tax withheld in preceding months. Withholding tax is not required to audit. Okay, the last one is company management reporting, and the frequency is annually or any change happens. The deadline for annual filing is March 31st. For any change happens, the deadline is 15 days after the change is made. And there is no tax to be paid and no need for audit. All right, let's start the Taiwan taxation part. Here we have an overview for the Taiwan taxation system. For corporates registered in Taiwan, the income source from onshore and offshore are both subject to corporate income tax, which we call global income basis. And for individuals, basically only the onshore income will be subject to individual income tax. But we need to pay attention on the offshore income as well, because it might have the chance to subject to alternative minimum income tax, which we will introduce later. About the Auto Information Exchange, Taiwan currently only signed the Information Auto Exchange Agreement with Japan, Australia, and US. And we also list down the advantage in taxation. The corporate income tax rate is 20%, which is lower than most of the developed countries such as Japan, Korea, and China. And the business tax is 5%, which is also lower than Singapore, Japan, Korea, and China. And it is a good location for global wealth management due to limitation of information exchange with other countries. Taiwan has signed the tax treaty with more than 30 countries in order to avoid double taxation. You will also enjoy the lower tax burden if you set up a branch in Taiwan. Right. Now we would like to introduce the corporate income tax first. As mentioned before, for corporate registered in Taiwan, its income tax will be levied on its total offshore and onshore income. And you may ask, what if the offshore income already been subject to the income tax in other jurisdictions? And the answer is that you can claim the foreign tax credit against the Taiwan income tax payable, with the limitation that the tax credit cannot exceed the tax amount if the Taiwan income tax applied. And in the below table shows you the tax rate applied for the Taiwan entity. Generally, the income tax rate for onshore and offshore income is both 20%. If your profit is $100, then the tax payable amount will be $20. The third one is about the undistributed earnings. If you decide not to distribute the current year's earnings to the owner or shareholder, and your Taiwan entity might be levied a tax on the undistributed earnings. The tax rate for branch is 0%, and for companies is 5%. The income tax for capital gain from sale of security is 0%, which is the tax incentive in order to encourage the Taiwan stock market. Dividend income. The dividend income will be exempted from income tax if the dividend is received from a Taiwan company. However, the dividend will be subject to 20% income tax if the dividend is distributed by a foreign company. The corporate income tax return for the year ended on December 31st is due on May 31st of following year, and the provisional income tax return is due on September 30th. About the loss carry forward, corporate loss can be carried forward against the future profit for 10 years. However, the income tax return must be audited by a local CPA. Audit requirement for income tax return. There are several criteria listed as below, and if your Taiwan company meet any of these, your Taiwan company will be required to do the tax audit. The first one is financial institutions like banks or insurance companies. Second one is public companies. And the third one is companies who apply for tax incentives and have annual sales over 50 million Taiwan dollars or more. And last one is any companies whose annual sales is over 100 million Taiwan dollars. All right, this is the general introduction about Taiwan corporate income tax. Let's move to another tax subject, which is also very important for corporates. Value-added tax. Taiwan is using VAT system, which is similar to European countries. The VAT is levied on the sales of goods at each of the stage of supply chain and the service provided in Taiwan's territory. When you sell products, you will need to collect output tax from your customers. And when you purchase goods, you will get input VAT from your suppliers. The VAT rate in Taiwan is quite straightforward. For general industry, the VAT rate is 5%. Therefore, no matter you are doing business like construction, manufacturing, or providing services, the VAT rate is fixed at 5%. And if you are doing exporting goods or services to overseas customers, you can also enjoy 0% tax rate and claim VAT refund. And the rest of rates are for those special industries, such as insurance company, nightclubs. The VAT rate are quite different, depends on Taiwan's government's intention. The last one, small-scale business. This is for those individuals or partnership who didn't register a legal business entity and with lower amount of sales. Okay, we already finished the corporate taxation. Now let's move on to individual section. To determine the individual income tax, we need to firstly identify the resident status in Taiwan. The resident status is basically decided by the days you stay in Taiwan. In the table, you can find that there are three categories: 0 to 90 days, and 91 to 182 days are defined as non-resident, and 183 to 365 days is defined as Taiwan resident. For the offshore income, the individual income tax rate for non-resident is between 18 to 21%, depending on the type of income. And the tax rate for resident is progressive rate from 5 to 40%. Generally, all the income generated from Taiwan should be subject to Taiwan income tax, no matter how many days stayed in Taiwan. However, there is an exemption for the service provided in Taiwan. If the days is within 90 days and the payment is made outside of Taiwan, then the income can be exempted from income tax. Many people also wonder whether need to submit the tax return and when the deadline is. For non-residents stay in Taiwan within 90 days, no need to file the income tax return. If any income happens, generally the payer will need to withhold the tax, so non-resident no need to file the tax return. And for non-residents stay in Taiwan between 91 to 183 days, If any income was not withheld by the payer, then the non-resident need to file the tax return to the Taiwan tax authority. The deadline is earlier of May 31st of following year or 1 week before leaving Taiwan. If you are a Taiwan resident, which means you stay in Taiwan more than 183 days in a year, you will be required to file your individual income tax return by the earlier of May 31st of following year or 1 week before leaving Taiwan. About the offshore income, it is basically non-taxable for non-residents. For Taiwan residents, it will be subject to 20% of alternative minimum tax. We would suggest you to discuss with the tax expert if you expect that a large portion of your income will be generated from offshore. The deadline for offshore income tax filing is same as onshore income. The earlier of May 31st of following year or 1 week before leaving Taiwan. Based on the table, you can find that the tax filing for non-resident is quite straightforward, withholding by the income taxpayer. However, if you are defined as a Taiwan resident, the tax will be more complicated. Your onshore income will be subject to the progressive tax rate from 5 to 40%. If your income is high, you will be subject to a higher tax rate. And in the next slide, we will introduce about what kind of exemption and deduction you can claim. Taiwan provides the tax exemption for taxpayer, spouse, and dependents. The amount is fixed at 88,000 Taiwan dollars for age under 70. For age over 70, the exemption amount will be 132,000 per person. Taiwan also provides the special deductions. The first one is salary deduction. It applies to taxpayer and spouse and all the dependents, if any of them has salary income. The exempted amount is based on how much salary income you have, and the maximum is 200,000 Taiwan dollars for each person. Interest deduction is for taxpayers who earn the interest income from the bank savings. The 270,000 maximum amount is for one tax filing, not for per person. The tuition deduction is for any dependents who are studying in college level above schools. The taxpayer can enjoy 25,000 Taiwan dollars deduction amount per dependent. The taxpayer can also claim the sales property loss. However, the deduction amount can only be offset with the gain amount if there is any gain from sale of property during the same taxable year. If the taxpayer has any child under age 5, the taxpayer can enjoy the child deduction amount to 120,000 Taiwan dollars per child. Here we just list down the special deduction which taxpayer usually claim for your reference. We will introduce another type of deduction for Taiwan residents. Here we can see two types of deductions in the table: standard deduction and itemized deduction. The taxpayer can choose only one of them for tax filing. The standard deduction is applied for taxpayer and spouse. It is a fixed amount of 120,000 Taiwan dollars per person. The itemized deduction includes insurance, medical, rental, donation, and mortgage interest. For insurance expenses deduction, there is no limitation for national health insurance, but 24,000 Taiwan dollars per person. For medical expenses deduction, it applies to taxpayer, spouse, and dependents, and no limit for deduction amount. For rental expense deduction, the house is must for living purpose with the limitation of 120,000 Taiwan dollars. And you can also apply for donation deduction. However, there are more detailed requirements. Generally, the donation amount should not exceed of income amount for 20% of income amount, with some exception provided. And the last one is mortgage interest expense deduction. You can only claim on living house, and the maximum amount is 300,000 Taiwan dollars. All right, we have introduced the exemption and deductions a taxpayer can apply for. We will show you an example for tax calculation in the next slide. Here, we provide a comparison of two tax calculations. One is assume that the taxpayer calculate the taxable income based on standard deduction, and the other one is based on itemized deduction. We assume the basic criteria is the same. The taxpayer has income of 2.4 million Taiwan dollars, which include 2 million for salary and 400,000 for interest income. The exemption amount is for the whole family, including taxpayer, spouse, and 2 children. 88,000 times 4 people equals to 352,000 Taiwan dollars. For salary deduction, we assume only the taxpayer has the salary income, so the deduction amount is 200,000 Taiwan dollars. Interest deduction, we assume that the family can enjoy 30,000 Taiwan dollars. Until now, there is no difference between standard and itemized deduction for income tax return. But from now on, the below part, you can see the difference. If the taxpayer choose the standard deduction, then they can enjoy 240,000 deduction amount for the husband and wife. Or they can choose the itemized deduction. By doing this, they need to prepare the supporting document for all the expenses, including insurance bills, medical expenses, rental fee, and donation. We just made up the numbers, which you can compare with the standard deduction amount. As you can see, the itemized deduction is higher than the standard deduction amount. And the taxpayer should choose the itemized deduction in order to minimize the taxable income. You may also notice that there is a basic living difference just before the taxable income. This is a new deduction released by the tax authority to protect the basic living right. Each person can have the amount of 182,000 Taiwan dollars for deduction. All right, this is an example to show you how to calculate the taxable income and decide which deduction is more benefit for you. Once we decide the taxable income, we can start to calculate the tax payable amount in the next slide. As we mentioned before, Taiwan resident is subject to the progressive income tax rate from 5 to 40%. And in the left part, you can see the formula of income tax payable, which is taxable income times tax rate and minus the accumulated difference. Once we have the taxable income, we can refer to the table in the right side. We just need to find the label of taxable income and times the tax rate, then minus the accumulated difference amount in the table. And finally, we will have the income tax payable amount. Until now, we already completed most of the income tax calculation. However, there's another tax issue we need to pay attention to, which is the alternative minimum tax, we call AMT. The basic concept is that because the taxable income already excluded the exempted income, such as overseas revenues. So we need to firstly add back those exempted income and minus the fixed exemption amount of 6.7 million Taiwan dollars. And the AMT tax rate is fixed at 20% to calculate the AMT tax. The next is to compare the AMT tax and the tax payable we just calculated based on the progressive tax rate. We will need to pay the higher one to the tax office. Okay. And the tax authority provides two filing methods for taxpayers. One is manual and another one is online filings. All right, this is the end of today's webinar. We also have webinars covering other countries such as Hong Kong, Singapore, Vietnam, Malaysia, and Korea. You can find the videos and other information in our website, or you can directly contact with us. We will provide you the free consultation. Thank you again and hope can see you soon. Goodbye.